Hey, everyone! Welcome back to Earning Catalyst, your go-to channel for insightful market analysis and updates. I'm your friend, and today, we have a lot to cover as we delve into the post-market analysis of the Indian stock market. Alright, let's jump right in. First things first, let's talk about the market performance. Today, the Sensex and Nifty managed to break free from their recent downtrend, snapping 2 days of losses. The Sensex closed up by a solid 368 points, or 0.56%, settling at 66,527.67. Meanwhile, the Nifty wasn't far behind, gaining 108 points, or 0.55%, reaching 19,753.80. However, amidst these gains, there's an interesting development with foreign investors. Foreign portfolio investors, or FPIs, remained net sellers for the third consecutive session. They offloaded stocks worth a total of 701.17 crore rupees, as per the data from the National Stock Exchange. On the other side, domestic institutional investors showed some confidence by mopping up stocks worth 2,488.07 crore rupees. It's worth noting that FPIs have been net buyers of a significant 46,618 crore rupees worth of equities so far in July. The cumulative investments in Indian equities for the year 2023 amount to a substantial 123,025 rupees crore, as per data from the National Securities Depository Limited. Up until the previous trading day. Market indicators. The rupee closed flat against the US dollar at 82.25, as reported by Bloomberg. The yield on the 10-year bond remained stable at 7.17% on Monday, following the previous close of 7.16% on Friday. Market performance. The Indian benchmark stock indices showed resilience throughout the day. Despite a lower opening, they managed to maintain steady gains, ultimately ending higher in trade. Notably, the Nifty Mid-Cap 100 index reached a fresh record high intraday on Monday. Sector-wise, we saw some interesting movements. The metal and IT sectors were among the top gainers, while fast-moving consumer goods and healthcare shares faced some declines. Global markets. Now, let's turn our attention to global markets. Today, equity markets worldwide were quite indecisive as traders analyzed the latest statements from central bankers for hints on the future path of interest rates. In Europe and the United States, equity futures remained steady following Friday's rally, which saw the Nasdaq 100 surge nearly 2% higher. Asian equities showed strength, with Chinese stock gauges particularly optimistic due to expectations of additional government stimulus. Stock-specific highlights. Let's shift gears and talk about some stock-specific highlights. Today, several companies contributed to the positive momentum in the Nifty 50 index. Reliance Industries Limited, TCS Limited, Infosys Limited, HDFC Bank Limited, and NTPC Limited were among the key players driving the market higher. On the other hand, Kotak Mahindra Bank Limited, ITC Limited, Bajaj Finance Limited, Hindustan Unilever Limited, and Apollo Hospitals Enterprise Limited were among the companies negatively impacting the Nifty 50 index's change. Adani Group stocks. An interesting trend we observed today was the entire Adani Group performing well. Market breadth. Before we wrap up, let's look at the overall market breadth. Today, the buyers had the upper hand, with around 57% of the stocks making advances. In contrast, 38% of stocks experienced declines, while 5% remained unchanged. Closing remarks. That's all for today's post-market analysis. If you found this information helpful, make sure to hit the like button, subscribe to our channel, and don't forget to tap the notification bell so you never miss an update. If you have any questions or want us to cover specific topics, please leave a comment below. We value your feedback. Until next time, happy investing and trading. This is your friend, signing off for Earning Catalyst. Stay tuned for more market insights. Goodbye.